What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is EURJPY. Now, why do I want to speak specifically about EURJPY? Because this pair is very near to providing to us a good trading opportunity. So obviously I want to share with you guys exactly the situation that we currently have on it and how we can be looking to capitalize on the next potential move. Now, as usual, first we will be covering the technical aspect, then we will go and see what we have from an order flow perspective, which is what hedge funds are doing in the market, so what the smart money in the market is doing. And obviously, if you're able to follow their orders, you do have an advantage over your competition in the market. And by the end of the video, by using the combination of our technical and our order flow analysis, we will be able to understand where we have the highest probabilities for a nice opportunity. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see how the market has just provided a nice impulse, correction, and impulse pattern to the upside. Now, if you are asking yourself, okay, but why has the market stopped exactly here? Now, the reason for which the market stopped at this area is because at this zone, what we had was the confluence of this previous monthly resistance turned support after the market broke it to the upside with the 0.382 of the Fibonacci taken on this monthly impulse. So from the low to the high of this impulse. And as we can see, the 0.382 and the previous resistance turned support were lining up exactly at this area, creating a strong confluence of support that we did expect the market to test and reject to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly time frame, price action is quite clear. We can see how this market has just provided an overextended W formation. And after the creation of an overextended W formation, what you expect is for the market to provide a correction at least to the 0.382 of the Fibonacci taken on the impulse leg. Now in this case, the impulse leg is from this low to this high. So if we take our Fibonacci from this low to this high, what we can see is that the 0.32 is exactly at this area. And we do expect the market to create a correction to this zone before starting and creating the continuation to the upside and rejection of this strong support. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about EURJPY quite a few times in the past. I spoke about EURJPY after the creation of this overextended W formation here. When the market was at this area, I made a full breakdown explaining all the reasons for which, from this zone, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. Then we had the creation from here of this continuation to the upside, and I made a full breakdown of EURJPY when the market was here, explaining all the reasons for which we wanted to see this move to the upside. And in fact, that is exactly what the market did. Then we had the creation of this overextended W formation, and from here I made another breakdown explaining all the reasons for which, from this area, we expected the market to provide this move to the downside. And once again, that is exactly what the market did. And then from here, I made a full breakdown explaining all the reasons for which we wanted to see this continuation to the upside. And once again, that is exactly what the market did. And after the creation of this overextended W formation, from here, I made a full breakdown explaining all the reasons for which we wanted to see this correction and completion at the neckline. And once again, that is exactly what the market did. And from here, I also made a full breakdown explaining why we wanted to see the continuation to the upside and creation of a higher high. And once again, the market gave us the move. And by the way, I will link all this previous analysis in description. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. If you have any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now, at the moment here on the daily, what we are creating is a nice M pattern. And generally speaking, after an M formation, an M pattern, what you expect is for the market to create a move to the upside to go and complete the pattern itself at the previous support support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last report, hedge funds have been decreasing their net positions. In fact, we went from having 140.2k net positions all the way down to having 89.9k net positions, with 250 short positions added with the last report and 11.7k longs getting closed. So the euro is starting to get quite weak. However, if we go and see what we have from an institutional perspective on the JPY, what we can see is that on the JPY we're getting even weaker. In fact, we went from having 50.5k net positions slowly decreasing all the way down to having minus 39k net positions. So a massive shift in a very small period of time, which means that basically hedge funds went from having more longs than shorts with 63k longs and 13k shorts, all the way down to having more shorts than longs. So the completely opposite scenario with 65k shorts and 26k longs. So currently JPY is very weak, which is the reason for which EURJPY, even though the euro is weak, has been making the move to the upside, because the JPY is even weaker than the euro. And that is why EURJPY has been in an uptrend, because from an institutional perspective, hedge funds are heavily bearish on the JPY. At least they have been so far. So how we will be approaching this potential short-term longing opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point we will be adding EURJPY to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is the previous support, now turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.